Starting a business is exciting, but let's be real, it can also be a financial minefield. And trust me, I've seen it all. I work with new business owners who ended up paying way more than they should simply because they didn't know what they didn't know. So today, I'm breaking down the three biggest money mistakes new entrepreneurs make in their first year of business and how you can avoid them. Hey there, I'm Chica, CPA and tax strategist, helping women navigate taxes and money with confidence so you can keep more of your hard earned cash without the stress. If you're a new business owner or a creative entrepreneur, this video is for you. We're talking about the top three mistakes that can cost you big time. And by the end of this video, you'll know exactly what to do to avoid them. All right, so picture this. You've just finished your first big year in business. You made more money than you expected, and you're feeling amazing until tax season rolls around, and then boom, you owe thousands. But where's the money? Where's the cash? Oh, yeah, that's right. You spent it on business tools, courses, a coach, even a well deserved vacation. Now it's tax time and you're scrambling to come up with cash you weren't prepared for. Does this sound familiar? Well, let me break that down for you real quick. You are now a self-employed business owner. And as a self-employed business owner, no one is withholding taxes for you like they did at your old W-2 9 to 5 job. As a business owner, you are responsible for making quarterly estimated tax payments, which means every 3 or 4 months, you need to be sending the IRS tax money. And yes, that means even if it's not tax season. Now, you might be thinking, oh my gosh, how much? Tell me more. Well, a good rule of thumb is to set aside about 25%, maybe 30% of your income for taxes and to keep it in a separate savings account. All right. So you want to set it and forget it, so to speak. What some of my clients do is for every client that they get or once a month, depending on how much revenue comes in, they'll do the calculation based on that month's revenue, right? So if $10,000 come in January, they'll set aside 25% of that, which is 2,500. And every month they're doing something similar so that when it's time to make a quarterly estimated tax payment, boom, they have the amount and they can pay the IRS without frustration, without stress. So that's a simple system that you can have. I also recommend, along with setting a percentage aside, also keep a separate bank account. I know some people, they think that because all this money is present in a bank account, that all that money is available for them to use. However, if you had a whole separate bank account that was specifically only used for tax payments, then you know that you're not touching that account only to pay the IRS or to pay your state taxes. So that's another strategy that I highly recommend because it happens to the best of us, me included, right? Where we think we have all this money, but it's like, nope, you got to allocate that amount towards your quarterly estimated taxes, right? Just to have that peace of mind so that when quarterly estimates are due, boom, you have the money to pay it. Okay. Now, saving for taxes is one thing, but another costly mistake is waiting too long to organize your finances. Let's talk about that. Let me tell you about a client of mine. I once had a client, and let's just call her Lisa. So she was running her business full speed, creating amazing work, landing clients, right? She was enjoying it, doing amazing things with her business. But when tax season hit, she spent hours digging through old emails and scrolling through bank statements, trying to figure out what was a business expense and what wasn't. Lisa was stressed. And worst of all, she missed deductions simply because she forgot what she had spent money on. If you wait until tax season to organize your business finances, you're going to likely miss deductions. You're going to overpay in taxes and you're going to waste time scrambling. And we don't want that for you. The IRS is not going to remind you about your tax write-offs, your deductions that you forgot to claim. No, they're not going to tell you. So once you file the return, that's it. So it is up to you to make sure that you are capturing all your deductions. So how do you do that? You keep track of your expenses as you go. You do that by using a bookkeeping app or a spreadsheet, right? It doesn't have to be rocket science. It doesn't have to be expensive. A free spreadsheet, a Google spreadsheet, just use that. I personally like to talk about QuickBooks a lot. I prefer that app. I recommend that app. And even if you're not an accountant, QuickBooks has gotten so good that business owners who don't have accounting backgrounds feel confident to utilize QuickBooks software, right? They make it so easy. They make it automated. Wave is another app. FreshBooks is another app. Okay? And I believe Wave has a free level. I think the basic level of Wave is free. So if you just want to try it out, or again, a spreadsheet, especially if you're new in business, your first couple of years in business, it's okay. Like just start with a spreadsheet and just make sure you are tracking and keeping track of those expenses on a regular, consistent basis. And you want to make sure you have a dedicated business bank account to make tracking easier. In fact, it is the law. The IRS says you need to keep your business transactions separate from your personal transactions. And if you don't, you risk the IRS saying that anything that's commingled, business mixed with personal, everything is disallowed. So even the business expenses will become disallowed if the IRS were to audit you and they were to see that you had mixed business and personal expenses. So keep that in mind. So easy to open a business bank account, and many of these banks allow you to do it for free, no fee at all. So open it and just make sure you utilize the account for your business use. All right. And then you want to schedule one money date per week. Call it a money date. And that kind of sounds sexy, right? A money date. And on this money date, what you're doing is, first of all, is it's you and your money, and you're reviewing your income, your expenses, your receipts, right? You're just sitting down. It can be 5 minutes. It can be 30 minutes, depending on how intricate you like to take it. And you're just looking at your accounts and you're looking at your spreadsheet or your QuickBooks app, and you're making sure that the transactions are entered, the transactions are categorized correctly, and that you know, okay, what has come in for the week and what has gone out, and everything is labeled correctly. And so speaking of expenses, one of the biggest mistakes I see is entrepreneurs trying to DIY everything when it comes to their taxes and finances. Let's talk about that real quick. All right. So I get it. I do get it. When you're first starting out and you're wearing all the hats, you're the CEO, the marketing team, the social media manager, you're the customer service rep, you're the admin, right? You're doing everything in your business and you're doing it alone. And you might think, I'll deal with taxes later. But here's the reality. Trying to figure it all out on your own can actually cost you more. I had a client who didn't think she needed a CPA. She figured she could just Google her way through tax season. And unfortunately, she ended up with a surprise penalty from the IRS because she missed a tax filing deadline. And she overpaid in taxes because she didn't claim all her eligible deductions. Later, she told me, Chica, I wish I had just hired you from the start. Don't let this be you, all right? A tax professional will save you more money than you'll pay them. At least that's the idea. That's the goal, right? And mistakes like misfiling, missing deductions, late payments can lead to penalties and unnecessary bills. And so at the least, you can have a conversation with an accountant, a CPA, just to determine, what are their price points, how they work with their clients, get your questions answered, right? And decide if you want to move forward with their services. And let's just say you have that conversation and you feel like, it may not be the right time. Perhaps your finances are not in order. You don't feel like it's in the budget. Okay, if you're not using an accountant, at the least, use one of the apps, because with all their automations, they're going to at least try to ask you the right questions to help you organize your numbers in a way that would make it easy to capture it on the tax return. Okay, so if you can't do the best, which is to hire the CPA, you can do something, which is to pay for an app, as opposed to doing spreadsheets and then doing everything yourself. All right, so there's levels to it. And just know your goal is to graduate to the point where you're killing it in your business, and working with a CPA becomes a no-brainer, becomes an absolute necessity, because that's your peace of mind. It's not just about what's cheaper. It's about what's effective, what's going to give me the peace of mind, who can I trust? Like, the questions change when you're at that level, and that's what you want to watch for, right? That's what you're striving for. Okay. And again, even if you're not ready to work with a CPA, at least have a consultation to make sure you're on the right track. Okay. Many CPAs will allow that, especially if it's not tax busy season, or even if it is, like, you never know. A closed mouth doesn't get fed. So just do your due diligence and consider tax planning, not just tax filing. Tax planning is often necessary for those that are in business and are profitable. Imagine if you are grossing over six figures and profits are six figures plus, but yet you're still a sole proprietor, you're still an LLC. There might be some tax planning that could be integrated, implemented, so that you can see 5-figure, 6-figure tax savings, depending on what you're working with. So again, just having a consultation can really put you way ahead of the game. Okay, let's do a quick recap of the 3 costly mistakes to avoid as a new business owner. Number 1, not setting aside enough for taxes. A rule of thumb is to just set aside 25 to 30% of your earnings. Set it aside so that when it comes time to make quarterly estimated tax payments, you have the cash to pay the IRS. Number 2, procrastinating on organizing your finances. You want to track expenses regularly to avoid stress and losing out on deductions. So do not procrastinate. Track regularly, weekly basis, and no more than on a monthly basis. You want to track. Just spend 5 minutes, 30 minutes, like, the time flies, but don't let it be March and you haven't looked at your numbers and all of a sudden it's December. No, don't be that person. Don't be that person. Do not procrastinate. And number 3 is trying to do it all alone. A professional, a CPA, can help you save money, avoid penalties, and plan for success. Not to mention, you get to keep your peace of mind. The first year, the early stages of business, is a learning curve, but you don't have to make these mistakes. I hope this video was helpful. With a little planning, you can keep more of your money and run your business with confidence. If this video was helpful, go ahead, hit the like button, subscribe for more tax saving tips, and let me know in the comments, what mistake have you seen or made before? How did you fix it? Let's talk about it. I'll see you in the comments. Until next time.